Julia, we're going to talk about this Chinese GDP number that everyone's rabbiting on about. I want to leave aside how big or small the number is, whether it's 7.6, 7.7, who really cares? It's slightly lower than people expected. But the big issue really is this movement that we've been talking about from the investment side of the Chinese economy to consumption. It's a rebalancing that economists both in China and in the US, for example, think is a good thing. Does that look to be happening in these numbers?
If you look over the numbers of this year, obviously the slowdown was led by withdrawing the stimulus of the last couple of years. So that obviously meant a slowdown in fixed asset investment, and that is showing up, but we're still talking about 20% growth, down from about 25% last year. Retail sales have slowed as well, but overall, if you look at them as a proportion of GDP so far this year, they're now at about 43%, which is quite a bit higher. I mean, we saw levels of about 30% over the last couple of years. It suggests there's some rebalancing.
So a big increase in consumption spending as a proportion of GDP in the headline numbers, but you think there may be some funny things going on underneath there?
Exactly. So I think, base consumption is ticking along, and that shows up in, you take a shoe company, for example, Bell, their sales this year have been pretty reasonable. But if you look at some of the luxury spending, that's not been doing very well. Obviously, Burberry's results weren't great this week.
And why is that?
Well, I think it's to do with the wealthy people in China tend to get a lot of their income from things like investments. And I think that portion of income is probably starting to fall. Obviously, the property market hasn't done very well this year. And those grey incomes, I believe, have been driving a lot of this luxury spending over the last couple of years.
So the grey market's faltering slightly. And from your time on China Confidential, you did quite a lot of work looking at fixed asset investment from government spending, basically. Is there a risk that seems to be coming back probably more than people might hope?
Well, this is the fear, is that bad habits die hard, and now China's seen a slowdown. We are now suddenly seeing fixed asset investment picking up again, particularly in among state-owned enterprises. So things like, the kind of infrastructure that China really needs, so improved kind of water management, for example, we're seeing spending in those areas coming back again. So although consumption, the sort of rebalancing has happened a little bit this year so far, it's probably going to go back to normal in the second half.
I'm going to put you on the spot as a final quick question. Do you think the scaremongering over Chinese slowing of growth is overdone or underdone or justified or not?
For now, overdone, but there are things bubbling under the surface, particularly still within shadow finance and loans being postponed and not being paid up. And obviously, no one wants that to explode this year with the political changeover, but I think more of that will start to come through next year.
So a typical Chinese economic story there, more than meets the eye. Thank you very much, Julia.